All right, welcome back to another episode of the Deduction Desk. This is Sagar, I'm Joe. Today we're going to be discussing employee benefits, overtime, and your rights from an employer and from an employee standpoint. And I think, a few of these things came up even in just conversations in my personal life of how does the overtime benefits work? What are some of the stigmatisms from an employer standpoint of why I would offer employee benefits? And then what are the benefits from a tax side as well as from an employee retention side? We're gonna dive in specifically to a couple different areas, starting off with, what actually counts as an employee benefit. We've talked about fringe benefits in the past. There's so many different opportunities for you to give some type of benefit other than direct compensation to your employees. How do you wrap that into a benefit package and what does that look like? Those things are things that are important for us to really discuss, especially as a business owner.
Yeah, those are usually the fun questions too. It's like, hey, I want to write off the gym for everybody in the office, or I want to get a really nice coffee machine for the office, right? Then there's also the unfun parts with like maybe the not so good bosses, which are like,
that don't
how
do anything.
I get this but not offer this?
Right. And we've had conversations with both, right? So this is kind of for both of you out there, the employers that are looking for some of those ways, and then the employees, right? So let's dive into employee benefits, right? So the IRS defines benefits as any form of compensation other than wages. So things like health insurance, things like retirement contributions, education assistance, paid time off, right? Like Sagar said, fringe benefits like gym memberships or commuter benefits, right? Yeah, if the business offers you a company car, those are all benefits that are not direct cash wages, but they are considered an additional benefit. So, we talk about in some of the other videos that we had talked about the differences between what's taxable as a benefit to you and what's not. And we're not going to dive too much into that. More specifically, from an employee and an employer standpoint, why does it matter, right? So from an employer standpoint, obviously, one thing that I think is overlooked pretty often is that it is an employee retention tool. It's your ability to look at an employee and say, not only am I going to compensate you, but I'm going to put other pieces in place that help offset some of the expenses that you would have if you were going to pay them from cash by yourself.
Yeah.
So, give an example, health insurance, right? We have employees all the time or businesses all the time that may or may not offer health insurance benefits, or let's say a 401k as far as another benefit or retirement benefit. But what is that key component that makes your employee second guess, right? If your employee is working for you and they're making $55,000 a year and the shop up the street says, look, I'm going to pay you $60,000, what stops them from moving to that other shop for that $5,000 an increase? And these things like employee benefits, like health insurance, like 401k, the match and the vesting schedule on the 401k, those things are things that make people second guess, right? I'm going to leave money on the table. I'm going to leave money from my 401k. It's going to get reduced if I move down the street. Not worth it.
Unvested stock.
Exactly. Health insurance, right? You're not offering the same type of health insurance as I do. Or maybe I have all my doctors lined up. I know exactly who I'm getting with my health insurance here. I'm going to have to switch all of my doctors, all of my plans if I move over to another company.
Yeah. And the key thing here also is, all of these things are usually deductible from a business's standpoint, right? So, you're offering these things to your employees, but you're also getting a tax deduction for it. From the employee standpoint, the only things that really become taxable, there's like a little rule of thumb you can use, which is if you can convert it to cash, it's probably a taxable benefit to the employee.
Right.
Like you get a bunch of gift cards to the company store. That's probably something that would be taxable to the employee. It's still tax deductible for the company, but now the employee may have some tax consequences versus, hey, there's some sweatshirts or whatever that you hand out for promotional purposes, maybe don't get looked at, but it's probably taxable too if you're grabbing those things. So, but this conversation is not necessarily about what is taxable, what's not taxable. It's offering those benefits and how to offer them in a way that you can take the deductions.
Yeah, and from an employer standpoint, we have these conversations all the time. You as the business owner, more than likely, depending on the size of your business, sometimes have a middle management professional, someone that is a higher level executive employee that maybe helps you with the day-to-day stuff so you continue to expand the business, right? What is the cost of them and that employee actually leaving, right? You don't think about it until the employee actually leaves. But let's say a lot of that day-to-day work, a lot of those experiences that you're putting on this person's plate to help you, what are the costs cost of that person leaving? Well, it's a lot more than what you would pay for health insurance and pay for a 401k match, because it's going to take your time to now go back in and do that work until you find the replacement. Then how long does it take for you to train that replacement to get to the point where that employee just was? So,
but then I also go back and I'm like, why can't you just pay these people more money?
Well, because I think it's easy for someone to, like another company, to come in and say, what are you getting paid? 80,000, I'll give you 85,000.
Yeah.
You're getting 90, I'll pay you 95, because they need the services and they know that that person's completely qualified.
Right.
But when you're taking off-beaten employee benefits, like a 401k that has a match, right?
Yeah.
Like a health insurance plan.
Match, right?
Right. Well, because the usually vesting schedule is 6 years, right?
Yeah.
So, or a health insurance plan that they know they're deductible, they know the doctors they can go to. And now, even if the other company has a health insurance policy, is it going to be the same as mine?
Or it's like 6 months before it kicks in.
Right, right. Yeah. Or I got to wait another year before I can fund my 401k in the new business. So it's stuff that I think as employers, we a lot of the times overlook, because to us, obviously, we run the business and no one's going to change that position for us. But for an employee, $5,000 or $7,000 might not be enough for someone to say, well, I'm going to leave all these benefits that I'm getting from that business. So it's important to think about that from that perspective.
There's also the perspective of sometimes you have to legally offer it too.
Right.
Depending on the state you're in, depending on how many employees you have.
Yeah, that's true, especially retirement.
That's why it's also important to get these health checks with the people that are running your payroll, running your employee benefits, to make sure, hey, am I unaware of something that I have to offer? New York City just started a new rule where if you have more than 4 employees, you have to offer retirement plans to all of them, whether it's a simple IRA or an actual full-blown plan. These are things that maybe you haven't considered or thought about. If you have more than 40 employees, you have to give them health insurance. There's lots of little nuances that also, even if you want, whether you're a good boss or a bad boss, you may be forced to give some of these benefits. And it's important to know what you have to and don't have to do. And that's a lot of that state by state.
Yeah. Well, and it kind of transitions into the next part of the conversation, which is, some of these employees that are working overtime.
Yeah.
Like, how does that overtime pay work?
That trips people up a lot.
Yeah.
Right? Like, we see labor audits that occur where somebody either makes a complaint, or very rarely is it random chance, these audits for labor. It's usually an employee who makes a complaint because they weren't given something they were entitled, or they thought they were entitled to something and they actually weren't. So it goes both ways. But federally and state, once again, super important. Some states have different rules than federal. So you have to know if you have a state that supersedes some of these rules. But federally speaking, 40 hours, anybody who works over 40 hours could be entitled to 1.5 times their rate of pay. Get paid $20 an hour, you work 45 hours, that extra 5 hours, you get paid at $30 an hour. And it's important to keep in mind that while this is a rule that's a general rule, specifically, okay, this is once again federal, not talking about states. Please make sure you check your own states for this. But federally, that threshold for 2025 is $58,656. So if you're on salary and you make over that amount, there's a good chance that you are not eligible for overtime pay. So if you're paying your employees high enough, they usually can get around it. There's certain people that are also exempt from it. Aside from high earning people, there's also salespeople. Outside salespeople don't necessarily have the ability to request this overtime. Executives, admins, learned professionals, they call it. So like your engineers, your accountants, your even medical professionals, those are not necessarily people who, even if they're below that $58,000 limit, can claim in all cases these overtime benefits. So while it exists, you got to make sure who falls in line for this and who doesn't. So that's an extremely critical one that I see people get tripped up with all the time. All of a sudden you owe tens of thousands or hundreds of thousands in overtime because you weren't paying attention to the rules in your state. You thought, maybe you're in New York and it's 35 hours and you're going off of the 40-hour rule. So now you owe a bunch of overtime to your employees and you didn't realize it, right?
But if they're making under, it was 43,000, now it's up to 58,000. If you're making under that,
yeah, correct,
then you would be exempt from.
If you're making over over that,
right,
you don't necessarily get the overtime. If you're making under that, you almost always get the overtime, unless you're one of these specific exempt professions.
Gotcha.
And then, while we're talking about this, we talk a lot from the employer side, but what about the employee side? There are rights that employees have, and it's important for business owners to know this, as well as their employees to know this, so that nobody's stepping afoul of the law and everyone's working within the confines and some ugly, incident doesn't occur for either side, right? The first one, the important one, is that right to overtime, right? Know the rules in your state if your state has its own overtime rules, and if it doesn't, know the federal rules and make sure that everyone that either works for you or the place that you work for is enforcing these overtime rules. The next one is you can't just say somebody's an independent contractor and be like, hey, you're not going to get any of these benefits. You're not going to get any of this overtime, right? It's very easy to put somebody and just say, all right, you know what, Joe's a 1099 guy. He doesn't really work for the office. He's only sales, but then Joe's over here answering phones and, making copies.
Right. So you can't reclassify someone as 1099 for the sake of getting 100%. Over some of these positions.
You got to know the difference between a 1099 and a W-2. And something that we sometimes use, and it's not the perfect example, but it's a pretty good example, is you're making a movie, okay? Joe, I'm the director, and Joe is the cameraman. He's probably a W-2 employee. Why is that? Because I'm telling Joe, point the camera here. He's showing up and waiting while I'm doing something else as a director. He's waiting for me to tell him what to do as the cameraman. That sounds like it's an employee-employer relationship. Now let's say Joe's my editor and I give Joe all the film that we shot for the week. And then I tell Joe, hey, within 2 weeks, give me your cut. And Joe goes and he goes to his apartment and he uses his, Mac, and he's using his computer and he's doing it at 2:00 in the morning, and then he's taking off the next day, and then he's doing it a couple days later. He's working on his own schedule. That's not really an employee-employer relationship. That's a contractor relationship. So it's important to know what is and isn't a 1099 contractor, and making sure that you're not classifying someone as a 1099 when they're really W-2 employees.
Yeah, that's a smart point, because I feel like there's a lot of businesses that are out there that just say, I'll just put them as a 1099.
Yeah.
You can't do that.
It's like, I'm doing them a favor. They get to write off this. They get to do that. It's like, you can't do someone a favor
just
by doing
decide
something illegally, right? And then that blows up in your face. We've had clients where they thought they were doing their employee a favor by putting them on 1099, and then they decide to part ways, and then the employee goes to the Department of Labor and says, well, I was actually a W-2 employee, but they paid me as a 1099 person. I should get all this unemployment or whatever. Right. And then the employer who was paying them for all these years now has to go cut another check with penalties and interest, because technically they were W-2s and they made an agreement to be on 1099. Similar to that, accurate paychecks, making sure you get pay stubs, making sure they break down all the deductions that are happening. You'd be surprised how many people we've run across, over the years, where they are not accurately paying their employees, and then that turns into a massive issue, because the biggest no-no is inaccurately reporting trust accounts, including the employee trust accounts for payroll taxes and things like that. That's the number one thing you need to be careful of from both sides. Then obviously you have rights such as a safe workplace. You have, the right to know what your benefits are. Your employer is required to give you a written handbook with what benefits they offer if they take any benefits themselves. Yeah. And
everybody knows this last one.
Then
this is pretty common in our era right now.
Yeah, exactly. And then the last one is the the right to not be retaliated against if you do speak up, right? So these are things that you should be aware of, both as an employer and an employee in all of these scenarios.
What are some mistakes usually that people make? I know we kind of went through some of them. Reclassification from a 1099 standpoint. Is anything?
Bad records.
I was gonna say things that stick out particularly.
Bad records is probably the biggest one, right? Say one of your employees complains. Look, we see this all the time, okay? Like, I'm not gonna pretend like we don't have we have our head in the sand. There's been clients that have come into our office that have said, hey, I paid somebody under the table for something, and now that person is claiming they never got paid, right?
Wow. Yeah,
and you know what? As an employer, shame on you. You are now put yourself in a situation where you paid someone, you didn't keep records, you didn't keep proof, and now you're gonna pay double, because this is something that an actual labor auditor came in and told me about. She said there was once a you know, a business owner. He was a restaurant owner. He owned like 3 or 4 restaurants, and all of the employees didn't like him. So maybe he wasn't the greatest guy. Maybe he was a great guy. Maybe, you know, I don't know the exact story behind this, but she said that, you know, the employees, basically 60 of them, got together and said they hadn't been paid for 2 months. Wow. That they were owed overtime, that they were owed all these things, that he owed them this money. And in our state, at least, the rule is always side with the employees from the state standpoint. Right. So the state said, you owe these people this money unless you can show us proof that you paid them. He said, I paid them in cash. They said, that's not proof. So he basically went bankrupt. To go bankrupt, basically selling his restaurants to go and pay out his employees. So keep good records. No matter how you pay somebody, keep good records. Keep hours when they come in, when they clock out, when you paid them, how you paid them, how often you're paying people. Follow the rules and it'll only, you know, protect you when something terrible happens.
And from an overtime perspective, I know that some of the overtime can have an effect on, you know, your regular rate of pay. Like how does that actually work?
So this is like quirky little rule, but if you get paid a commission, for example, right? Let's say your base pay is $50K a year, right? And then you get a commission based on your performance, right? And you're also entitled to overtime in your particular case, right? Okay. So in your particular case, if that was what was happening, your base rate is not what your overtime is calculated based on. It's based on
that and the commission.
This plus the commission, divide that by whatever the 35 or 40 hours a week that you're supposed to work.
Right.
After that, that's your base rate. Your overtime is double that.
I see. Okay.
So you got to be extra careful as an employer on managing hours for your employees when they are entitled to overtime and they get commissions.
Right. So if you have an anticipated amount that you're going to pay them from an overtime standpoint and you're basing it off of their base salary, but they've gotten quarterly bonuses all throughout the year, you're probably using the wrong number unless you included those.
Yeah. And you know what? That kind of makes sense, right? Because if you wanted to kind of rig the system against your employee,
you pay them low and give them a higher commission.
An hour and your commission is $60.
Right.
So
yeah, smart. So I think at the end of this, kind of to wrap things up, key takeaways from an employer standpoint are, make sure that you're reviewing your employee classifications annually, right? Are they supposed to be 1099? Are they supposed to be W-2? What determines them being a contractor? I think, Sagar's movie set example is a good example, right? Am I directing someone to do things and are they doing them and waiting for me to do it? Or are they coming in on their own volition and editing some for us, or we're giving them a task and they're taking their time to do it. We're paying them to do it.
Yeah.
Again, tracking hours, even if people are remote, right? After hours time, right? If they're working not from the office, from somewhere else, how are they tracking their time? Are they putting their own hours in and making sure that you're staying up with that? And then obviously keeping good records. From an employee standpoint, know your classification, know your rights, as far as overtime goes. Make sure that you're keeping track of your own numbers and you're putting yourself in a position to understand that this is exactly what I'm supposed to be getting. Take advantage of those pre-tax benefits like FSA or HSA or 401k plans. And then if something seems off, right, that's what HR departments are for, right? Ask questions, go talk to someone, say, hey, going over my overtime, going over my 401k, it doesn't really make sense to me. I'd like to make sure that I review it because we work with business owners constantly and sometimes the business owner doesn't really understand it as much as they think they should, right? And you're the employee thinking everything's handled correctly and sometimes things slip through the cracks.
And I think most of the time, it doesn't have to be a contentious issue. Most business owners that we work with want to give these benefits to their employees.
Of course. I don't think it's ever done maliciously. I think sometimes they just miss the bonuses that are adding onto their overtime, right? Is a perfect example of that.
Yeah.
So ask questions, be informed. We appreciate you guys joining us and look forward to seeing you on the next video. Thanks, guys.
Thank you.
See ya.